helping borrowers through payment stress. Now, it's going to affect a lot of people. We're talking about interest rates like rocketing for many people who may be fixed at a couple of percent, maybe lower. And when they come to refix, maybe this year or next year, they're going to have to be paying 6+%. That's another 4%. If you've got a big mortgage or an average size mortgage, that's hundreds of pounds. Now for some people, it's 800-900 quid a month, which is a lot of money if you're on a salary. Yeah, you had a pay rise, but where are you going to find it from? Some people will struggle. Now the broker's role, of course, during the MOT is to talk about this, share with the client what the numbers are and get their impact on it, because they may want some help, they may want some advice to help them to afford their mortgage. Now the FCA, of course, are the king of the country. The FCA have got their MCOB 13, which has been around for 19 years now, and it works really well actually. MCOB 13. In fact, MCOBs were one of the best things the FCA's ever done, because they've worked. And what they do there is they ask the lenders to treat people fairly. They make sure that people are looked after if they are in trouble with their mortgage. And they've asked lenders now to lighten, or they've given them permission to lighten affordability checks now when helping customers with their monthly payments. And that's really important, because some people's affordability might not have been as good as it was a couple of years ago, and of course stress rates etc. have increased, so generally affordability's come down. So what have we got then? Well, first of all, we've got lenders. So let's take a look at the lenders themselves. What can lenders do to help people? That's the first question. Well, there's a lot of things lenders can do. The first thing is they can switch to interest only. Now this is quite an interesting one, interest only, because most people now are on repayment mortgages, and if somebody's struggling to make payments, you can switch to interest only. And the government actually have sort of stepped in, because they've lent on the lenders, bit of leaning, you do what we tell you kind of thing, because we looked after you back in 2008, because we recapitalized you guys, and they've said to lenders, look, we want you to offer interest only to people. And what they've cleverly done is they've offered it for a 6-month period, and it doesn't affect your credit rating, so your credit rating is still good. So most people, you'll probably find, will automatically go to this. Lenders will make it almost like a default option, and it can make a hell of a difference to your mortgage payment. Because if you go to interest only, capital doesn't need to be repaid. If you've got a short-term mortgage, that makes a hell of a lot of difference. It could just be enough to help the customer to be able to afford the mortgage for a 6-month period. And they'll probably extend it beyond then as well. And I think that's a really good scheme, really good system. The other thing you can do, of course, is you can extend the term. Now that does depend, of course, on where you are in your life. But if you can extend the term, it doesn't make a huge amount of difference. You'd be surprised, actually, the numbers. It doesn't make a huge amount of difference to somebody's monthly payment. It can bring it down a little bit. So you could extend the term maybe into retirement, because later life lending is quite popular now, of course. Plus an interest only, that could reduce your payments down quite dramatically as well, which I think is brilliant. The other one, of course, is the permission to sublet the property. Now, of course, we talk about that when we talk about lodgers. So giving them permission to sublet a room, again, might be a way forward. So there's quite a lot of help from lenders. And of course, you can talk to the lender on behalf of the client. Nothing wrong with that. Or you can give them a number to phone. Lenders are employing mass departments of people taking calls from customers. But I think if you give the information about this, it puts the reliance on you, the mortgage advisor, rather than the lender. Remember, you're there. They're your client effectively, and you're helping them through these discussions, and you're talking about what options are available, and then you can facilitate the contact to the lender direct, or whatever lender you decide to use, of course, although you're probably looking at product transfers here. PTs is what we call them, product transfers. You're not going to be remortgaging, aren't you? Somebody's going to be struggling to make payments. So what about the government? What about Jeremy and Rishi? They've been busy looking after everybody. Of course, the government have had a lot of pressure at the moment, the UK government, to bail out. Now, I think this is wrong. I don't think we should. I mean, we've got used to bailing out with, furlough, the banks being bailed out. If anyone gets energy costs, why should mortgage holders be bailed out by the government? I mean, tenants should be bailed out as well. So I think that's not going to happen ever, not in a million years. But what the government have cleverly done is they've kind of looked at ways they can help which won't cost them anything. I think that's quite clever. So first of all, they've lent on the lenders and made them do a few things. As we said before, they've lent on them for this interest-only holiday of 6 months. And they'll probably start promoting that, get an interest-only holiday for 6 months kind of thing, which will help a lot of people. They've also lent on them to give subletting permission as well. So the other one is the 12-month moratorium. So let's just put that in black here so we can see what they've done now. For 12 months, nobody's going to be repossessed. Moratorium. It's a lovely word, isn't it? From being repoed. There you go. Which I think is obviously a splendid thing. Somebody being repossessed, the worst thing could ever happen to anybody else. And there's a few options as well that people can look at. So what else have lenders done? Well, what they've also done is they've improved the SME system, support for mortgage interest, which has always been around. They reduced it to a 3-month waiting list a couple of months ago. So once you're on universal credit or you're getting benefits, you can apply for support for mortgage interest on a bit of your mortgage, not all of it, and you can have your interest paid by the government. Now it's not a welfare benefit. It creates a loan. It creates a second charge. Effectively, the government are becoming part owner of your property, and the loan is repaid on sale or whenever you want to, of course. Now what they're going to do here is they're probably going to be promoting that a bit more, and they'll probably at some point, I think, make it available to somebody who isn't claiming benefits, isn't on universal credit. Because effectively the government are just taking a charge on somebody's property. They're kind of lending people money, aren't they, if you think about it? But it's not like a welfare benefit where they say goodbye to the money. They're lending. They'll get the money back. So it's a good investment. I think they'll probably rebrand SME at some point to make it available for people. So if you think about it, you get interest only. And if you really are in trouble, you can get a SME to cover the interest for a little while and then extend the term. So there's lots of options available to people who are going to be struggling as well. And I think that's a really good thing. I think they'll probably rebrand the Rent a Room, or at least publicise it more. We've got a little session coming up for you shortly on that one. They'll probably rebrand that, which means to make it more available to people, market it so people know what it is. They might make it more tax efficient. At the moment it's pretty tax efficient anyway, but they might improve the tax efficiency. Maybe the capital gains tax issue they might erode as well. So the government are doing quite a bit that they can to help people, and I think that's a good thing that they're helping as much as possible. So your job then as a mortgage advisor is to talk to the client about this one. If the client wants to go and see the CAB, they can do, Citizens Advice Bureau. But I think you should have this information available to assist them and have the numbers on a calculator ready to work out. What you are doing, of course, at this point is you are doing a product transfer or a PT. Now make that known to the customer. When you talk to them with your mortgage MOT, make it known that you can do the product transfer, and you'll probably end up doing that, and you'll help them through that. You aren't going to charge for that, of course. This is how will you make money from this one? I would hope that you're going to be looking at their protection needs as well at this point, and you do make a few pounds from the product transfer, but not much. But if you do a lot of these, you will certainly be able to cover your costs as a mortgage advisor, rather than making great big fat profits as maybe you've made in the past. So focus on the fact to the client that you are probably going to look at the PT. You will look at the marketplace to see what else is available for them, but a product transfer with their existing lender will allow them to do these things. That's the whole point behind it. So I think this is a key. I think this is a key because the last time this all happened, and 2008 crash, there's quite a lot of government help to help people with repos, and the repos are quite low then. But the last big problem was in 91, sort of 1991, 92, 93, when we had a property plummet. Prices collapsed, particularly in the southeast. Repossessions just went completely out of control. Lenders repossessed quite happily and readily. People handed in their keys, you see, back then. Because what happened, people had a mortgage and a house, the house price went down, the mortgage became negative equity, and people were just gave up. Here, Halifax, have my keys. And that was quite a prevalent thing. And so it was awful situation. We don't want to repeat that. So I think it's your role to do an MOT. I hope that's been a good update for you.